Hey everybody, my name is David Bibby and I'm the CEO and co-founder of Hypercharge Networks. I'm sure you guys have seen a lot of presentations today. I'll come back to this later. So Hypercharge Networks provides turnkey electric vehicle charging solutions to a variety of use cases. So maybe by show of hands, how many people in the audience drive an EV today? Cool. I'm one. There's 3 of us. Awesome. So you know what? That's probably there's not a ton of people here, but just looking at the that percentage, it's probably about 10%. And by 2035, if you believe the federal government, 100% of us will be driving them, or at least every new vehicle will be a zero emissions vehicle by then. So I think the reality is you can debate how quickly it's going to happen or if it actually happens, but our business provides critical infrastructure to make sure that it does, that when you do buy an EV, that you have somewhere to charge the EV. The 2 questions I get asked all the time are, where do I charge this thing and how long does it take? And so by just way of background, I've worked in technology companies my whole adult life. I've been the Chief Technology Officer in financial services. I was the head of digital services for the world's largest Caterpillar dealer before founding this company, a company called Finning International. In early career, I worked as a network engineer at TELUS. And so I have a pretty eclectic background, always building technology in emerging businesses. So when I worked at TELUS, they made more money on payphones and long distance than they did on internet and mobility. I worked in those sectors, the emerging ones. So back in 2019, one Saturday, my wife asked me to go test drive an EV with her, and we fell in love with the vehicle on the spot. And it's the only car I've ever owned that got better after I bought it because of all the over-the-air updates I got in the car. I got better range, better infotainment, better security. I even bought seat heaters with a credit card after I bought the car. So that was awesome. Meanwhile, when I would go to recharge my car, 50% of the time I couldn't get it done. It either didn't work or there wasn't enough capacity or something else happened and it just wasn't reliable. And so I was busy helping digitize the Caterpillar world, and then I saw this major problem / opportunity, and that's when Hypercharge was born. Today, we've sold over 6,000 stations all across Canada and into the US. We're in 13 states in the US. We've established a great brand. If you Google EV charging solutions, we're #1 in organic today. I'm very proud of that because that means we didn't have to pay for an ad. That's huge for a micro-cap company like ours. We're a recurring revenue story. So we're not profitable yet. I'm going to jump to the bottom line because I know that the small cap discoveries is all about finding the unloved gems or the undiscovered gems in the market. Normally they'll say it needs to be profitable first, so I'm grateful to them for letting us be part of this, right? Because we're not there yet, but we've been relentlessly on a path to profitability over the last year and a half, and we're very close. But that's great to be profitable. Our whole mission is to become durable with our recurring revenue. So you've looked at this slide enough. I've talked about us being all across Canada and in the US as well. The US is still very light for us. It's almost untapped. We make money by selling hardware. Every piece of hardware we sell is networked and managed. It has a recurring revenue component, and that's all topped off with service on top of that. We have 2 different ownership models. There's where primarily what we do is we sell the hardware and then we maintain it after that. In some cases, we'll own and operate the equipment as well. So that happens less so. And one of the things that we had a choice early on that we could either try to own and operate and make money through utilization. That's capital heavy, especially for a small cap company. And you've got to be really good at picking sites. I've looked at 3 companies in the last sort of 18 months that did this. None of them are flowing cash like they thought they would, because utilization takes time, adoption takes time. So we went with Model A at the top. That's been fantastic for us. So just kind of a little bit on the market itself, a couple slides here. And I'm happy to share this with any of you after. Come and see me, we'll email it to you. So if you read the headlines in 2021, you would have thought we'd all be driving EVs by now. Like, for sure, we'd have 2 of them probably. And it was really overhyped, the market in batteries and electric vehicles, and of course EV charging was seriously overhyped. But if you read the headlines today, you'd think that it was never going to happen. Well, the reality is somewhere in the middle, right? Because look at this. We've got a record-breaking year in electric vehicles being sold. We have 20 million globally sold, and that across the globe, EVs are growing. EV adoption's growing. I don't have it in here, but I just saw a soundbite the last week or so that for the first time ever, we reached parity in cost in terms of the cost of an EV versus a gas-powered car. That's the first time ever that happened in North America. And I think it's probably not sustainable in the US because they're going to get rid of the $7,500 tax credit. But what you can see is that the costs are coming down, and within, I think, the next 12 to 18 months, it will just be that way on a go-forward basis. Ford's just announced $5 billion in their Louisville plant to build their next $30,000 vehicle. So early on, it was expensive EVs. It's not a huge market for those. Now what we're seeing is lower cost vehicles. So the number one issue is a lack of reliable charging infrastructure out there in the market, and that's where we come in. We sell primarily to multifamily homes, residential chargers, that's multifamily, because over 90% of the time, probably like 98% of the time, you charge your vehicle at home or at work. You actually never go to a gas station. So you don't want to. In fact, I have a gas-powered vehicle, and I half the time forget to go fill it up. It's running on the empty. So we sell there. We also sell publicly, public charging, business charging, through parking companies. And most exciting for me, at least, is fleet. So when I worked at Finning, I thought that fleet electrification would be huge by now. Well, there really weren't that many vehicles on the market. So today that's changing. We do all of that through our preferred partner channel. So we have over 60 partners that are selling our products to their customers, which is really an efficient way for us to scale. So we're capital light, agile innovation at the core. We founded the company at the end of the pandemic. Then we had high inflation, high interest rates. Then we had Build America, Buy America. We had to reshore supply chain so we could sell in the US. And then we had tariffs. And so as a little company, we've navigated all the way through all of that in the last 4 years. It's a lot of fun. But it's really part of our DNA. We have some innovative software and services. It all is at the heart of our business. We have Quantive and Evion, which are our software platform. The software is what creates durable revenue over time, and we've got some really smart things we do there. About a year ago, we launched our carbon credit program. So every station we sell in Canada qualifies for the federal carbon credit program. And let's talk about some of the big projects that we've done. We have a reputation for doing some of the largest single buildings in the whole, all of Canada, including, all of North America. So King George Hub is in Surrey, almost 800 stations there. We followed that up with a project out at Oak Ridge Park for the people that are in BC. These are 2 large development centers. We put projects in there. We work in Alberta, Manitoba, and Saskatchewan with a company called Devereaux. This is fantastic, I think, because they used all of our services and all of our software and all of our hardware. So we started as a hardware company. We expanded into hardware plus software. Now we're hardware, software, and services. Devereaux is a great use case for that. And then the one on the far, I guess it'd be your right, this one here over my left shoulder, is a battery buffered charger. So when we decided not to manufacture our own chargers, it was deliberate, because who knew in 2021 what the market would want? There would be innovation, and today it just continues, right? So that battery buffered charger, what it does is it allows the customer to not need to upgrade their utility service. It lowers their operating cost, and it meant that we could put those chargers in weeks instead of in anywhere from 9 months to a year. So some of our customers, like this is, I'm most proud of this, right? It really is about our customers who drive the growth of our business and any business. We have some of the largest developers in all of Canada. Mattamy Homes is the largest private home builder in North America. Quadreal is a massive REIT. We work with them, and so on here. In the middle, we work with the parking companies. These are companies that already have access to our ideal customer base, and we work very closely with them to sell. The bottom, we've got some fleet customers. There's many more that are not even on this slide. And then we're working with hospitality and municipality as well. But our primary market is multifamily and public parking. And then increasingly we're doing more in the fleet space. Revenue-wise, founded in 2021, we had our first revenue in the spring of 22. You can just see steady growth. We're at an inflection point right now as a company. If I look at this slide here, we grew the company by, this is year over year, 279% growth. The same time, we reduced our operating costs by 30%, which meant we reduced our losses, net losses, we're a startup, by 75%. So we're super close to break even right now. We have over $5 million in a backlog that's continually being refreshed, let's say, every quarter. We add about $15 million worth of top line in every quarter. And some of that we win, some of it we don't. I think this was, yeah, okay. The pipeline here right now is 7,500 ports. That's about $45 million worth of opportunity. This customer base represents 750,000 parking spots. If we don't even go find another customer, but we just convert 10% of their parking spots, that's huge upside. So, looking at milestones and catalysts, I talked about a bunch of milestones already, but U.S. expansion is key for us as we go forward. We have increasingly improved our platform, right? That our platform will be driven by, and is already driven by, AI. So we're using a lot of the modern tools there. In fact, we use it throughout our whole business. About 2 years ago, I mandated that every department must use AI, and there wasn't much in the way of AI. But today, when you talk to our sales channel online, you're talking to an agent named Evelyn. And Evelyn is an agent that basically qualifies all those leads before a real person needs to get on the phone. So we use it there. We use AI in our sales force. So we have our own custom GPT that goes through. And so kind of like, I love automation. It's been my whole career really, has been about automating and creating efficiencies. So AI just allows us the way to supercharge that. We're doing that. The bottom where it says 30,000 plus, that's the number of drivers we have on our app today. It grows by about 1,000 every month. So that's super exciting. It doubled in the last year. So where are we going? We're going to continue to grow in Canada. Canada's our home base. We want to dominate here. We want to expand smartly in the U.S., so we're doing that through our partner channels. We're always on the lookout for M&A. Now, being a microcap, it's got to be the right people at the right price. So we've got a few ideas there. We're diversifying our revenue through the software that I mentioned, but also through the services that we offer our customers. A lot of front-end consulting work being done that adds to our pipeline. And then finally, we're looking at energy management. Where does Hypercharge go as a company? Very quickly, it expands. It's not a pivot, it's an expansion into energy management. Because energy management is already needed, severely needed by many of our customers. They don't have enough capacity in the buildings that they own and manage, and so we're helping them with that. Today we already do load sharing, we do energy management in the buildings. We're running a couple of pilots with some very advanced energy management solutions that allow them to kind of improve the efficiency of the environment they already have. So they only have so much capacity in this building for things. And so what our software allows us to do is stretch the capacity that they have through dynamic energy management, and then we can throttle how much energy the chargers provide in those moments. Let's say when the elevator's not in use, it can be increased, and when the elevator is in use, it can be decreased for a period of time. So it's dynamically allocating energy as required. But beyond that, when we start looking at adding battery storage, as I mentioned, the auto dealer example that I talked about there, we'll be putting these in buildings or around buildings to buffer the grid. By 2032, BC Hydro is already forecasting a capacity constraint, and so they're looking for novel ways to add storage in-field in the grid here, and that's where we're going to come in. So our team is, this is part of the team. We have a variety of people with a lot of different tech backgrounds, either in SaaS. We've been very fortunate that we've been able to hire some of the best EV charging people. But now what we're seeing as a company, 4 years ago we were nobody, and so we were pretty excited when we could hire some talent. We had to train a lot of people. We now have people that are industry experts that have a lot of relationships in the parking industry, in the EV charging business, in the SaaS business, in the energy management business. So to summarize, clean balance sheet, no debt from an investor's point of view, high quality customer base, strategic channel to market. Think of those parking companies. Think of all the electrical contractors. They're out selling Hypercharge every day now. Aligned with long-term trends, point number 4. This is happening. It doesn't have to all happen in the next year for us to win. It's going to happen. People are transitioning. We have a great leadership team, and we are on an aggressive growth trajectory, and most importantly for investors, I think, is the path to profitability with growth, right? I mean, we could be profitable today, but we wouldn't be very exciting. So we kind of got to balance both of those things. So that's it.